What's going on, guys, and welcome back to the channel. If you're new here, my name is Jason, and on this channel you'll find videos on personal finance, investing, and money related topics. So if those are the type of videos that you're interested in, be sure to hit the subscribe button down below so you don't miss out on future content. And in today's video, I'm going to be covering the top 3 best dividend index funds that you can buy in Canada. Whether you're a beginner and you're looking to put some money into the markets, or if you've been invested into the markets for a while now, these 3 index funds can definitely be on your watch list. Just a little disclaimer, whenever you're putting your money into any type of investment, be sure to always do your own research. For instance, in this case, my risk tolerance may be way different than what your risk tolerance is. So always do your research and make sure it is the right fit for you. And with that being said, let's jump right into today's video. If you're new to the world of investing, then you may not even know what an index fund is. So an index fund is a type of mutual fund or an exchange traded fund, also known as an ETF, with a portfolio constructed to match or track the components of a financial market index. And that typically includes something like the S&P 500. And index funds are said to have a broad market exposure with a low operating expense ratio and a low portfolio turnover. And the index funds will follow their benchmark index regardless of the state of the markets. And index funds are generally considered the core portfolio holdings for retirement accounts, such as your typical IRAs or 401k accounts, or if you're in Canada, an RRSP or a TFSA account. And the legendary investor himself, Warren Buffett, has always recommended index funds as a haven for later on in your life. And especially if you're new to investing, it's known that you're better off getting into index funds rather than individually picking stocks to invest in. And like I mentioned earlier, you can have index funds that track the S&P 500. Also, you can have index funds that follow the NASDAQ or even the Dow Jones Industrial Average. Now that we got that out of the way, let's jump right into the best top 3 dividend index funds for Canadians. And these top 3 dividend index funds can be considered recession proof since you're investing in a pool of stocks rather than individual ones. And these are also great for dividend investing if that's only your sole purpose. Number 1 on the list is Vanguard FTSE Canadian High Dividend Yield Index, and the ticker symbol on that is VDY.TO. And the Vanguard FTSE Canadian High Yield Dividend Index measures the investment return of common stocks of Canadian companies that are characterized by high dividend yield. And currently, this fund seeks to track the FTSE Canada High Dividend Yield Index. So if we take a look at VDY's year-to-date chart, you can see here that it got destroyed during the pandemic, just like every other stock out there. And before the pandemic, it was trading around $36.74. And when the pandemic hit, it dropped about 40%. But since then, just like everything else, it has kind of rebounded back up about 36%. But since this last high, it's still down about 18%. And the Vanguard FTSE Canadian High Dividend Yield Index does pay a really good dividend of 5.07%. And unlike regular stocks where they pay a dividend every single quarter, this actually pays you a dividend every single month. And the MER on this is 0.22%, and that's considered very, very small when you compare this to a mutual fund, where typically they're around 2 to 3%. And this fund currently holds 51 stocks that are broken down into different categories. And that includes basic materials, consumer cyclical, financial services, real estate, consumer defensive, healthcare, utilities, communication services, energy, industrials, and the technology sector. But as you can see, it's really heavy on the financial services side, which is weighing about 57.91%, followed by the energy sector, which is weighing about 29.78%. So if you take a look at the top 10 holdings, and especially the top 3 holdings, which is Royal Bank, TD Bank, and Enbridge, which just these 3 alone consists of 38.08% of the total assets. And especially during the pandemic, the banking sector has been hit pretty hard, and that reflects onto this fund. And moving on to index number 2, which is the iShares Canadian Select Dividend Index. And the ticker symbol for this fund is XDV.TO. And this fund seeks to replicate the performance of the Dow Jones Canada Select Dividend Index, in which the index is comprised of 30 of the highest yielding dividend paying companies in the Dow Jones Canada Total Market Index. And this fund actually pays a higher dividend than VDY that we just looked at, and it's sitting at 5.77%. And if you take a look at the year-to-date chart for the iShares Canadian Select Dividend Index, as you can see here, back in February, it was trading up about $4.50 compared compared to where it's at right now, and it did take a dive of about almost 40% due to the pandemic. But since then, it has relatively bounced back of about 36%. But since February, it is still down about 17%. And similar to VDY, this fund also pays a dividend every single month. And the iShares Canadian Select Dividend Index is comprised of 30 different stocks, in which some are similar to VDY. And this fund does have a little bit of a higher expense ratio of about 0.55%. And if you take a look at the risk indicator on this, it is showing medium. And similar to VDY, this fund is also heavy on the financial services sector, and it's sitting at 58.92%. Followed by utilities, which is at 12.16, and then right underneath is the communication services sector, sitting at 10.98%. And taking a look at the top 10 holdings, you'll notice that they're fairly equally evened out rather than having 2 or 3 stocks that make the majority of the portfolio. So looking here, the top 3 holdings that comprise most of the fund portfolio is another Canadian bank called CIBC, next is Canadian Tire, and followed by Royal Bank. And last but not least, fund number 3 is the iShares S&P TSX Canadian Dividend Aristocrats Index Fund. And the ticker symbol on this is CDZ.TO. And this fund seeks to replicate the performance net of expenses of the S&P TSX Canadian Dividend Aristocrats Index. And if you pull up the year-to-date chart on this, and you can see here that it's trading fairly below of what it was trading back in February, because it did see a dip of about 46% during the pandemic. And since then, it has recovered almost 46%. But if you compare that to back in February, it is still down about 21%. And this fund has the most holdings out of the 2 that we just spoke about, and currently it's holding 81 different companies. And looking at the fees, this is the highest one out of the other 2, where the MER is currently at 0.66%. And just like XDV, the risk indicator is also medium. And just like the other 2, CDZ also pays a good dividend, and currently it's sitting at 5.22%. And similar to the other 2 funds that we spoke about, the dividends on CDZ are also sent out every single month. And looking at CDZ's sector weightings, out of the 2 other funds that we went over, this one in my opinion is more diversified than the other 2. Even though the highest sector weighting in this is also the financial services, but it's only at 23.76%. Whereas the next 3 sectors is real estate, utilities, and industrials. And the top 10 holdings in this fund are much better weighed out than the other 2, are ranging between 2% and up to 2.55%. And the top 3 holdings on this consists of TransAlta Renewables, Transcontinental Inc., and Fiera Capital Corp. And just like that, I hope you enjoyed today's video. And if you did, be sure to drop a like because it does help with the YouTube algorithm and it also supports the channel as well. And if you've made it this far, be sure to hit the subscribe button down below so you don't miss out on future content like this. And just like that, guys, I will see you on the next video.